Hello. So one of our tasks today is to demystify crypto. And I'd like to try, each of you is involved in crypto and blockchain in a different way. Could you each briefly for me describe what you do and tell me what you see as the purpose and value of crypto? Nick.
Thank you, Edie. It's wonderful to be back in the kingdom for FII this year. I've been working in crypto now for 10 years, so we've seen some booms and busts, and at blockchain.com, we're concentrating on building a resilient business that can survive for the duration of time. We're going to build a neobank for the future of finance, and it's our mission to build a more equitable financial future by putting tools in the hands of people all over the world that makes it possible for them to send, receive, secure, trade, and exchange digital forms of wealth.
All right. Carry on. Andrew.
Hey everybody, first time here and super happy to be here.
Welcome.
The Republic is the first real vertically integrated digital merchant bank, combining everything from funds and investments to tokenization to a token sale platform to infrastructure and treasury management. I've been in the space over a decade, similar to you. As we look at what that space really means in the short and long term, I always try to describe it in the simplest terms, which is blockchain is the first ability to transfer a digital asset from one entity to another without creating a copy. And that creates a series of opportunities, whether that's through finance or governance or gaming, and really flips the narrative of what ownership really means and produces the ability to democratize it in a way that we haven't seen before.
Thank you. Tim.
Hi, everyone. Also, my first time here. Really a pleasure to be here at FII. So firstly, Galaxy, we've actually dropped the digital because, of course, it's digital. So we're just Galaxy now. We're a publicly listed, global, diversified, regulated financial services company. So we do sales and trading of tokenized assets. We have an asset management unit, an investment banking unit for capital raising, a ventures unit where we invest off our balance sheet. And also we're an operator of mining. And so we do that globally, and we work with the largest institutions globally and really try and increase the velocity of that institutional adoption cycle. So the why is a great question. I'm gonna just bring it right back to, especially in the context of FII, which has been quite inspiring. What really matters, we can talk about all the technical elements of what you can do, but really this is about a better future for corporations, governments, and individuals. This is about democratized access, faster, better, cheaper, removal of intermediaries, removal of frictions. And I think it's really for the next 10, 20, 30 years, one of the biggest drivers, I think, of economic growth and prosperity that we're seeing, among others. So it's a big moment for us.
Great. Hany, welcome.
Hello. Not my first time here, but the last time I was in Riyadh was in 2002.
It's different.
It's changed quite a bit. I'm with 21 Shares. We make it easy to invest in crypto using your existing bank or brokerage. We're the world's largest issuer of crypto exchange-traded products, ETFs, ETPs, and we have them listed on stock exchanges all the way from Australia in the east, across all of Europe, and we just listed the Middle East first in Dubai 3 weeks ago. As to the why, I think a lot of people like talking about once-in-a-generation opportunities. I think if you look at history, reserve currencies in the financial system does not often change once in a generation. And so crypto to me is a world-changing technology, and it's more of a, let's say, once in a century, once in a couple of centuries kind of opportunity. And it's early, and I couldn't be more excited to be here.
We might come back to the idea of just how early are we in this technology. But I want to talk about the volatility, because you mentioned, I think, crypto winter. Somebody talked about crypto winter that we've been through. There are times when cryptocurrency looks incredibly volatile, and maybe that's all it is: high volatility, high risk, the tulips of our current age. So Andrew, how do you respond to that?
Yeah, I think that narrative has been consistent for a while, but has really been turned upside down this year. In fact, Bitcoin's less volatile than both the NASDAQ and the S&P 500. Crypto volatility has fallen over, or Bitcoin volatility in particular has fallen over 40% since its high marks in January. And we've seen NASDAQ 100 volatility increase over 90% since earlier this year. So the correlation that we've seen in the past to macroeconomic data related to that Bitcoin volatility has really, really shifted in the opposite direction. Then you tack onto it things like inflation and hyperinflation that you see in Turkey and Argentina, Sudan, and areas even in this region, and you start to find yourself looking at Bitcoin as actually a much more stable asset than more traditional securities.
Interesting. I'm going to ask you guys, feel free to jump in if you've got something to say. But let's talk a little bit about where we are now. A panel a little bit later, we'll talk more fully about regulation, about rewriting the rules or writing the rules around crypto. But let's talk a little bit about how we can regulate and stabilize cryptocurrencies. And Nick, I'd love if you could take us off. We've had some pretty interesting developments in the UK where a few of us live just in the past few days. And actually, these are quite positive for crypto, right?
Yeah, so the UK has obviously been having some tumultuous political changes this summer, as well as seeing some fairly strong volatility in the pound. But just recently we have seen that Rishi Sunak was elected and now put in power as the new prime minister. He's 42 years old, he worked in finance his whole career, and he has a very pro-tech and knowledgeable understanding of cryptocurrency and sees some of the benefits of building a technology hub in London to invite innovation. And I think this is a really important signal for Europe. I'm really excited about Rishi's appointment as someone who has an understanding that there is this opportunity to invite all this talent, to invite all this capital, and to build the next generation of financial services that are digitally native. The scale that will potentially provide is innumerable. There are billions of people that don't have access to basic financial services yet, but we now have the tools, and everyone on the stage is currently working to deploy those so that we can build a more equitable, just, and fair financial system.
Interesting. Yeah, Andrew.
Yeah, I think Nick makes a really important point. And in fact, just this week, we've seen Rishi get out of the gates really, really strong. If you go back to April, there was always a big question mark about the UK. Is it really going to support this or not? In April, Rishi, who was then Chancellor, and John Glenn, his secretary, made a very big statement that was heard around the world of you want the UK to be a crypto hub. And then things went a little bit quiet, and of course, yes, it's been a little bit tumultuous. Let's not talk about that. Let's look forward, not backwards. And to your point about volatility, I mean, at one point last week, Bitcoin had lower volatility than UK rates and currency, so that's kind of
pretty
mind-blowing.
interesting.
So that kind of really changes the game a little bit when we talk about volatility, so I love that it's been upended. But now Rishi's in power. He's got John Glenn back with him in the cabinet. He's got a wonderful gentleman who I met last week called Andrew Griffith, MP, who's now the FST. Now, why is all this important? So there's a financial services and markets bill that just went through the UK Parliament this week, and a last-minute addition that was put in by Andrew Griffith last Friday basically posits, and this has been passed, so in theory this is on its way to a 2022 bill, that crypto will become within the regulated perimeter. What does that mean? That means that any regulated entity in the UK, if this passes, will be able to trade unencumbered crypto assets overnight. Now, it also means if you weren't regulated, you cannot, so there are other consequences. But this is pretty unusual on the global stage to have just basically, without question, recognized this as another risk asset that should be allowed in portfolios, should be traded alongside everything else, should be regulated, should have all the appropriate modern risk management elements around it. And I think we might find, this seems to have gotten less press than I think it should. We might find in time that this is a turning point globally, and other jurisdictions might realize it's time just to think of this like another asset class.
So I don't want to focus too much on the UK, but Hany, you decided to locate your company in Switzerland, and I've listened to you describe how the Swiss authorities, when you met them, kind of got it straight away. And I'd love you to take us through a little bit about where you think Switzerland is in terms of the mass of regulators and regulations.
Well, I think one of the most exciting things about crypto is how global it is, and how global it is from the very beginning. It's one of those technologies that absolutely will not be built in Silicon Valley. despite my American accent and living in Silicon Valley in San Francisco for 10 years, we based the company out of Switzerland, and you see a lot of innovations around the world in markets that maybe would not have gotten that.
Right.
I think it's very relevant for the region, because if we were able to build regulated frameworks really well, there's a lot of growth there. The Swiss got it mostly because at the very beginning, a Bitcoin wallet looked to them a lot like a Swiss numbered account. And as it morphed and transformed and became more digital gold, well, they're also some of the biggest gold traders in the world historically, and it all sort of clicked for them. As you look at additional attributes of crypto assets, the decentralization perfectly describes how Swiss, as from a governmental level, runs their country. And you end up seeing a lot of, on the technological, ideological, economic, and political fronts, crypto is quite Swiss in identity. And before basing ourselves in Switzerland, even though we have global operations now, we did look at 27 total jurisdictions.
Right.
So we really did our homework, and we found a good home in Switzerland.
Interesting. So the conversation isn't all about Bitcoin, but it does tend to be dominated by Bitcoin. And sometimes it obscures what the larger opportunity of blockchain is and what it could be used for many purposes. You mentioned, Nick, a moment ago, the ability to bring in so many different populations. I'd love to hear from a few of you about what you think the larger opportunity, and give me a real solid example, one that maybe isn't in the public awareness at the moment. Nick, and then Andrew.
Yeah, sure. So I think for the last decade, we've sort of proved out the use case that you can use cryptocurrencies and digital assets to do basic things like make payments over the internet. There's still a lot of work to do, to get the mass scale that's necessary for worldwide economic activity, but there's a lot of progress that's been made. I think over the next decade, there will be a confluence of things that occur that are going to expose some new use cases beyond just payments and new digital assets. So you'll see the tokenization of a variety of precious goods, whether that's intellectual ideas, music, art, maybe tickets to concerts, and much more. And so it's very easy now to essentially issue a digital asset that's counterfeit resistant on all kinds of different blockchains. The Bitcoin blockchain is the most well-known one, but there are many others now that are building very developer-friendly APIs to essentially expose all these new capabilities. And so young people are really getting this. Over the last 12 to 18 months, the cultural zeitgeist around the world has woken up about how to form new relationships with their communities and fans. So if you're an artist, or you're an NFL team, or you run a soccer franchise, you want to find new ways to engage your audiences. And building digital assets into your fan experience is something that's really exciting. At blockchain.com, we partnered with the Dallas Cowboys, which is the most popular and most valuable NFL franchise in North America, to start to explore how new fan interactions can be developed over the next few seasons. And so I'm really excited about some of the things that will come forward.
An example about how you think that might work?
All right, so Dax Prescott is the quarterback for the Dallas Cowboys, and he's a partner of ours at blockchain.com. Imagine maybe next year they're on a run to the Super Bowl. He scores the game-winning touchdown. We mint that moment in the form of a digital little movie that then gets gifted to a fan in the audience. That fan will own that asset in their wallet for the rest of their lives, and there's a world where they would be paid royalties for owning that moment. Now, that could be exposed across all kinds of different exciting events, from horse racing to all kinds of things. But that's a small moment that I think is extremely exciting about the types of opportunities that are out there to reimagine how we interact with our fans, with our communities, with anybody who is basically minting moments in life.
Interesting. Andrew, what about you?
Yeah, I mean, the opportunities are nearly endless. Blockchain's vertically agnostic, right? It can touch anything, whether it's a sports team or healthcare or finance. It spans multiple industries. Even for us, on the Republic side, we're doing practical implementations. We do tokenized film financing. We do tokenized music financing. We do tokenized litigation financing. You can truly tokenize nearly anything. The bigger issue is not how it's deployed. Actually, the bigger issue is when it's deployed, like how is it managed, how is it handled, how do people adopt it, and this is all infrastructure. Mm-hmm. And when we talk about opportunity right now, infrastructure is the opportunity. There's so much infrastructure that still needs to be built.
Like what?
well, like one of the pieces that people don't love to talk about, but the reality is this tax infrastructure. How do you handle this from a tax perspective is extremely complicated. He's at Galaxy. They have a huge trading desk, and if you talk to the CFO, he'll be sure to tell you that the tax component is one of the more complicated things that they work on. So we look at tax, we look at custody and storage. You know, everyone wants to do gaming, wants to do GameFi, wants to do Web3 gaming, but what does that look like from a custody perspective? You know, how is that handled? You know, what are the regulatory frameworks and regulatory infrastructures in place? You know, we may see something in the UK happening here soon, which would be fantastic, but that's just one jurisdiction, right? And this is a global phenomenon. It spans. It's a very rare instance where there's a playing field that everyone can participate on. That's the democratization aspect, regardless of where they are. You add things like open source that anyone can access, anyone can share that tech and that information. You add in things that like all programming languages are in English, so everyone's able to operate, you know, basically from the same environment, and then mix in globalization. It really becomes, you know, a universal environment. But infrastructure is the area that we need to be spending most of our time. You know, one of the things that there's this push for hyper commercialization. Like everyone wants everyone in this room to be the adoption layer, but it's just really not the case. If you look at some of the larger follies that have taken place and hacks and bridge hacks, that's all because we've tried to push commercialization ahead far too soon. Right? Right now, every 13-year-old on the planet has existed in a world where Bitcoin has existed. 3 years from now, every 16-year-old on the planet will have existed in a world where Bitcoin has existed, right? That's the adoption layer, right? We're building the roads and pipes and railroads for them. They're the ones that are going to be building the adoption piece.
Okay, Hany.
So I think there are two ways of looking at infrastructure, and I actually think this is one of the biggest misunderstandings of the crypto opportunity space. Yes, we as an industry have a lot more to build, and we're still working on it. But it is my very, very strongly held belief that the biggest impact of blockchain and crypto will come not from all of the consumer applications that we talk about, which are easier to visualize and easier to understand and easier to sort of study, but rather the invisible infrastructural underbelly of the entire world. And no one really thinks as much about that.
Like what? Give me an example.
I'll give you a great example. The oldest bank in the US happens to be a custody bank. What do they primarily do? They custody assets, and they're one of the biggest fund administration platforms out there. What does that really mean? It means that they have, among State Street and BNY Mellon, I think they each have probably $30 to $40 trillion under service that they administer. And it's a lot of accounting, it's a lot of record keeping, and it's incredibly poorly done. It is not technologically driven at all. So you have a 240-year-old institution that's primarily run off of Excel spreadsheets, that does not have a lot of the automation that we know comes standard with blockchain. And they're working on it, as are others, but those are the kinds of things where it's not very easy to talk about these things. They're not very sexy topics to discuss either. But actually, that drives more value and has more damaging effects done poorly than any of the other consumer applications that we talk about. It's just much harder to visualize and sort of discuss.
Interesting. Tim, I know you work on this as well.
I do. I think actually I'm going to build on what everyone said here, and I've come up with this analogy which tends to be quite powerful for those of you who may not be so deep in this space, because let's face it, who knows how the internet works? I don't. I know it's called TCP/IP. So I
can help you with that. Yeah.
You don't really know, you need to know how the blockchain works, right? But what's the analogy that will kind of bring it home for all of us as just mere mortals and normal consumers? Well, I call it the Casablanca principle. And what the Casablanca principle is removing the asset from the medium. Casablanca, great movie, 1947, Humphrey Bogart, classic. That was originally developed on celluloid and distributed on celluloid. And then through time, that changed. We saw it go to Super 8, and then to VHS Betamax, and then to Laserdiscs, if you remember those. I used to have those. Then DVD, and then Blu-ray. And at the time, Blu-ray was pitched as a very high-fidelity digital medium, but it really wasn't. We still had to hold it. Then we went to streaming, and now we've seen the lines materially redrawn across the entertainment industry in how we record assets, how we distribute assets, and how we view assets. And it has really changed the economics of that industry materially. And we're not even finished, and I'll come back to that in a second. But like that's not happened yet, and I think this is exactly Hany's point, is spot on. That hasn't happened in hundreds of trillions of dollars of assets, derivatives, equities, debt, private equity all around the world that still operate in this very analog, I'd claim in some cases it's not even Blu-ray. I mean, we're still back in VHS in some areas. There's still fax machines being used out there, which is mind-blowing. So the outcome that we get to drive over the next 10, 20 years is moving the entire financial system from this last step into digital. And here's the missing last piece. Even that last step wasn't quite there in entertainment because, as we were pointing out, music NFTs is a whole new way, and film NFTs is a whole new way of owning the asset and distribution and asset rights. So streaming is not the end. We're now going to get to this later point, and a great project, to be very specific, that we're involved in is called Token Tracks, and there are many others out there where we're tokenizing the music itself. It's being owned by the consumer. The rights are owned by the consumer. The artists get most of the money. It's changing and redrawing the lines again. Watch that happen in traditional finance and see how far we get next as a next step.
That's pretty exciting. We might come back to the idea of what else we can tokenize. I wanted to talk a little bit about trust, and trust has been a theme that has percolated into pretty much every different session. And trust in this whole industry has been a little shaky, right? Stablecoins, to take one of the examples, were supposed to be a solution to some of the volatility, but I wonder if they can recover trust after what we've seen in the collapse of Terra. And I believe that, Hany, you might have had a little exposure to that. Is that right?
We had the world's largest Luna ETF, and so I know about that situation intimately. Look, I think there are a couple of ways of looking at this. One is Terra was an algorithmic stablecoin. What that means is that there's nothing that is backing it up. It is pegged to the value that it was pegged to, which was the US dollar, presumably, algorithmically, not by actually having a dollar in reserve in the background, as other regulated, audited stablecoins are. Stablecoins represent somewhere between 10 and 15% of the total market cap on any given day. They're incredibly popular, and the vast majority of them are collateralized, and our ETFs are collateralized. Collateralization is a wonderful thing. I think the better way of looking at some of the trust elements is actually not just the Luna collapse, which again, not collateralized. We were very, very, very adamantly advocating for full collateralization, but rather you have a lot of you have a lot of these different kinds of technologies that miss out on the regulatory elements. If you asked anyone, should I build a regulated stable coin versus an algorithmic one, we would go with regulated. And then when you look at the traditional finance versus decentralized finance, even in some of the biggest hedge fund blowups, Three Arrows Capital, et cetera, they paid every single cent of every DeFi loan that they had outstanding. Why? Because it's a smart contract. Because there's no one that you can call on the phone and say, I'm going to default. Can I buy a few more days? And so I think that some of these collapses have shown us how DeFi infrastructure, decentralized infrastructure, how decentralized lending protocol, insurance protocols actually work perfectly under the most stressful of conditions, whereas the centralized counterparties, I'm old enough to remember, Lehman Brothers being a very prestigious place to have worked, are not as relevant in this instance. And so I think, if anything, some of these collapses have shown how resilient and how strong some of the more technologically driven decentralized finance infrastructure really is. And then on your stablecoins point, keep it regulated, keep it audited.
Right.
There are some very basic table stakes here that sometimes people tend to ignore.
Okay.
Yeah, I think the Luna example is another great example of us pushing commercialization when it's not truly viable yet, right? That algorithmic-based stablecoin solution, which was actually Do's second attempt at it. His first one, Do Kwon is the founder of Terra Luna. His first attempt failed, and he came at his second attempt, and the second attempt failed. And even just a couple days ago, Near Protocol's algorithmic stablecoin also failed. And we're finding ourselves in a scenario where we think this is a commercialized product, and it just simply isn't.
Right. Nick, I can see you scribbling away there.
Yeah, I just want to, this is a complicated topic. Algorithmic stablecoins are really at the cutting edge of trying to build a totally new way of managing supply for some type of currency. And it's very experimental. People should treat it as an extraordinary high-risk asset. And so there are alternatives, though. USDC is a fully regulated, fully collateralized stablecoin. It's a really interesting instrument, almost as an extension of American financial foreign policy. It makes it possible for anyone in the world to basically get a US dollar-denominated bank account on a wallet, on their phone, anywhere in the world. And so there's some really good use cases for digital dollars, digital pounds, digital...
Like what?
Payments internationally. Right now, you could make a payment on USDC from a wallet in the United States to a wallet in the Philippines instantly with settlement basically for free. And so I expect the use cases, not actually so much even in the retail side, but just in the business side, to pick up. The faster we can make payments, the more efficient the economy becomes, the faster we can make more investments, and the more liquid everything becomes too. So I'm actually quite a fan of stablecoins, just not necessarily the algorithmic ones yet. I think they hold promise long term, but getting the incentives aligned correctly is proving to be extraordinarily difficult.
I think the bigger conversation around stablecoins is centralized versus decentralized, right? USDC is a highly centralized product. They can freeze that asset nearly anywhere, burn it, claw back, whatever, where a lot of the algorithmic-based stablecoins are a more decentralized solution. And in the industry, we try to walk this very thin line of, do we want to be centralized? Do we want to be decentralized? What does true decentralization mean? Is it something that's attainable? And over the next decade, that is going to be the bigger hurdle, I think, for us to come over. I'm a huge fan of DeFi. DeFi is generally on a decentralized platform. And I'm also a fan of code as law, the idea of however it is written is the law of which it abides by. And so getting people comfortable with that idea, but also moving these products to a proving ground to where we can trust them is going to take, a series of time.
And a bit of a contrarian opinion on this, by the way. A lot of people talk about dollar supremacy potentially ending as a result of Bitcoin or other crypto assets. There's a very good argument to be made for if we're building bridges that represented a 10 to 15% of the total market cap of the crypto market that are mostly built on stable coins related to the US dollar, there's a real argument that if proper regulations exist, that this should add to dollar supremacy. Because by and large, a lot of the new entrants that are purchasing USD-backed stable coins are not in America. And there's additional volumes going into the US dollars through this, and the GBP and the euro, and as we see more regulated stable coins out there, that it could actually strengthen and work hand in hand with fiat currencies. In a non-zero-sum game, then I think sometimes we...
This seems like a good moment to bring in a conversation around central banks and where the thinking is, and I understand that there's different thought in different countries, but I'd love you to take me through a few examples of where you see interesting moves by central banks. Nick?
Central bank digital currency may not actually be necessary because of stablecoins. They already have the technology to essentially issue the currency on a digital medium. So digital dollars, digital pounds, and by extension, the ability to manage the currency supply from a central bank exists today. So I'm not sure it's really necessary for central banks to implement their own technological fabric to issue their own currencies, because we can do that already on the existing blockchains. I think there'll be the conversation as they go through learning more about how to do this, but I also think it's pretty complicated for a central bank as an old human-driven institution to basically become a software entity. Right. And I think it's more likely that open source utility protocols...
But aren't we all becoming software entities?
We all have to get better with software, I agree with that. But in short, the conversations around central bank digital currencies today are mostly about what could the potential benefits be. And I think, as you just described, I think they're pretty extraordinary for countries that understand that if anyone in the world could actually have exposure to their currencies quickly and easily, that would probably benefit that country. And so there's kind of a strategic conversation to have about how do we increase the amount of people that have access to dollars, pounds, euros, or any currency, and the central banks can lead that conversation.
Yeah, Tim.
Yeah, you know, I actually agree with you that we may not need it. I tend to take more of a centrist view in this space, which is, you know, it's very easy to get DeFi versus TradFi. I mean, a few years ago, it was my blockchain's better than your blockchain, which gets very tiresome as a conversation. What we really need is just a better system. And I think there are parts of TradFi which we definitively would need and will be there. They've been around for a couple of hundred years for good reason. And there are powerful parts of DeFi which a lot of people in TradFi simply don't understand yet and don't recognize that it's going to make things materially better. Central bank digital currencies is a great example of where we've kind of got this mix. And you've got to be careful. As soon as you say stablecoins, you then need to get into a taxonomy of all the different types that exist. As soon as you say CBDC, you're into the same problem. There's wholesale stablecoins, there's retail stablecoins, there's different ways of backing them. Where I will agree with Nick actually is this is not a new thing. I was involved in one of the very first. I actually set up the first one with Singapore, Project Ubin, back in 2016, and that's still alive. And you know, one in the Bank of Canada, and then we did one in Hong Kong, and you know they're all over the place now. They proliferate, and there's lots of different examples of banks looking into it. The state of the art is there. You can totally do it. Where I think CBDC could be helpful as a stepping stone, and I think it will happen, and Switzerland has been quite prominent here, and when I was the CEO of Six Digital Exchange a couple of years ago, we were working on Project Helvetia with the Swiss National Bank and using our infrastructure to create this. So I have first-hand experience of working with the government to actually make this a reality. And we did prove that it could work. Why is it important? Well, because if you can bring the traditional institutional financial system, which is, by the way, where all the money is, like by
Right.
orders of magnitude, then you're able to settle in a way that could be more, you know, the settlement element could be much more efficient. That just as a single stepping stone, not saying that's the end game, not saying that maybe that as a stepping stone ultimately demonstrates the level of efficiency we can get to, which brings more sort of belief from the institutions and the regulators, and then it goes out of existence. I could see that being a sort of route where we go. But that's not that far away. I think ultimately the question is that going to happen? I think you'll see Switzerland and some others do that pretty soon. And these are big, you know, material economies that matter from an institutional
perspective. Hany, you live in Switzerland.
Yeah, look, I think one of the biggest advantages that central banks see, one of the biggest drivers for CBDC seems to be more on the regulatory front. And this fear, perhaps, of nefarious parties coming in and such. And so I think it's really, really important to sort of split the two, where CBDCs will exist by some central banks. The Swiss central bank is a highly sophisticated one. They probably have the ability to do it well. But so should private companies. And oftentimes private companies will lead with better, more innovative consumer-facing products because they're closer to the space. But it's very, very important to know that that doesn't necessarily mean that the private companies are unregulated and the CBDCs are the only ways of doing a stablecoin that's regulated. We have private companies that are highly regulated in this space. USDC, which was brought up, you can go and redeem your dollars for physical dollars in New York, provided you go through some KYC steps. There are a lot of DeFi aspects as well where there's a decentralized element, but then once you interact with the real world, which works similarly in a lot of other use cases, you then have to go through some of these regulations. And so I think we have to really, really, really remember that it is possible to innovate. It's possible to do it outside of central banks, which are not technological giants, and still abide by all of the laws and regulations that are put in place to make us more comfortable going through our daily lives.
Interesting. So actually I want to ask the audience here, how many of you here have some exposure to crypto? How many have bought some crypto? And how many have yet to take the plunge? Anyone still? All right, so we've got some adopters here. What should the audience do now? Where should people be thinking about moving their money into? What should they be? What kind of questions do you think they should be asking, Nick?
So at blockchain.com, we've had over 85 million people sign up for a wallet. And if you're new to crypto, you're going to want to sign up for a wallet or a brokerage or an exchange. And we support all of those at blockchain.com. We have 40 million users. 1/3 of worldwide Bitcoin transactions originate from blockchain.com wallets. When you talk about trust, it is very important that you work with a partner that has been here for a while, that has seen the ebbs and flows of the industry, and right now is an amazing time to get involved in crypto. Not when it's at the record peaks, but when there's time to build, when there's opportunity like there is in this market right now. And so I do think it's important to do your homework. There are a lot of different crypto assets out there today.
What are those questions you have to ask when you're doing the homework?
So I think you need to look at how long the firms have been around. Are they reputable? Do they have sound governance? Do they have a good track record in customer service and customer support? These are fairly basic things. Companies in our industry that have been around a long time really care about their customers. And that's true of everybody on this stage here. We want to make sure we're taking care of them. And so you want to work with firms that are reputable. And it's easy to do that research.
Interesting.
Yeah, it doesn't have to be finance related. Right? If you're interested in this space, doesn't necessarily mean that you have to make some type of financial commitments. You don't have to follow the speculative markets. There's other areas of blockchain that are super interesting. You know, whether that's the NFT space or the infrastructure space, there's other areas that you can participate in and learn. So I'd say first thing to do is just try to be the best student you can, consume as much as you can, ask questions, find experts, build relationships. Got to remember that this industry is community driven. It's the most community-driven that there is. That's why things like tokenizing all these assets is possible, because there's other people that are interested. It's the reason that Dallas Cowboys are interested in this opportunity, because it allows them to engage on another level with their fans. It actually creates a bi-directional informational flow.
So if you're a fan of a band and you want to buy into their music, is that a thing that's coming super soon? In fact, you can already do it for some.
I mean, we already do it. We just
For
partnered
who?
with the second largest music catalog on the planet, $4.8 billion worth of music catalogs, and we're going to be selling those catalogs out to the crowd. Our token sale platform is the only platform that can sell to U.S. retail investors, and we can sell internationally. So we can sell to everybody. So you'll be able to, if you're a big fan of Elton John, you'll be able to own Elton John tracks and earn royalties on Elton John tracks. If you're a fan of The Weeknd or whoever it may be, or if there's an upcoming artist. If you are an upcoming artist and you want to raise capital from your fan base and you don't want to pay highly predatory financing options from, production agencies, you can raise capital from your own fan base that you've built and you've spent time developing, that want to be a part of whatever your next piece is. So this is all still very early, but this is coming fast and furious.
So this is an interesting question. So how early are we? If you were going to give us an analogy for comparing us to some other technology, we already heard about Casablanca. Where would you put us? How early are we?
I mean, typically, it takes human beings somewhere in the 25 to 30 year range to adopt a new data transfer solution. So if you look at radio was invented in 1889, wasn't commercially viable and in homes until the 1920s. You look at television was created in 1920, really wasn't in homes till in the 50s, right? And actually it exploded. In 1950, there was only about 6,000 televisions in homes. By 1955, it was in over 50% of homes in the US. And then you get a little bit more advanced. You start looking at TCP/IP. TCP/IP is the protocol that the internet is built on. That was developed in 1970. Well, internet really didn't become popular until 1995. Right. That's when it became a commercialized product. There's a really interesting parallel that's happening between TCP/IP actually and blockchain itself. We're 13 years into Bitcoin. Right. Well, in 1983, 13 years into TCP/IP, it became the standard protocol for internet development. And we're starting to see that now. We're starting to see standardization of protocol 13 years after Bitcoin, just like 13 years after TCP/IP, right? So, where are we as far as in the development? Are we in the 1983 stage of the internet? No, probably not. There's things, like I said before, open source and all coding languages in English and globalization, that will make this accelerate faster. But we're still incredibly early in that development process. And this is a human condition problem. Like, this isn't not really something that you can use technology to leap everything forward. You just have to deal with it. It's a generational shift. Back to that younger generation is what's going to really pull us forward.
Hany, anything to add?
I think if someone were to come to you in the 80s or early 90s and tell you about how big the internet would be and how big Amazon.com would be today as a company, you should sit up and listen and at least delve into the topic. Yeah. And so what I'm telling you here now is that over the next 20 years, crypto will in some way, shape, or form build a new reserve currency or change it. rejigger our entire financial system, change every bit of everything that requires a middleman, and have a number of both infrastructural and consumer applications that we cannot imagine while creating a new internet from scratch. That's what Ethereum and Solana and all these smart contract platforms are. And so what would I recommend? I'd recommend to learn about it and to study. All of our research is free. It's on 21shares.com/research in 6 languages, including Arabic. And it would behoove you to really delve into this, to dive into it and see it, because we're so early, it's not even funny. We have yet to see a lot of the really revolutionary ideas and applications and uses.
Yeah.
And everything so far has been quite exciting. That, again, it would behoove everybody here to learn more about all of this, because it will represent a disproportionate amount of our future over the next 20 years or so.
Blockchain and crypto are going to change everything, Nick.
Yeah, I think I would add one last thing to that, which has sort of been stated, but basically crypto adoption is essentially tracking the internet adoption almost identically. So the first version of the internet allowed us to consume information that was published, a read type of internet. Then we heard about Web 2.0, which was read, write, and led to the era of social media. What we're experiencing now is read, write, and own, in a whole new incentive scheme for how people can participate in an economy where all people all over the world can send and receive precious information over the internet. So as you continue to see this,
as long as you have a smartphone.
you will need a smartphone and you will need access to the internet. So that is still a barrier to entry, but one that has decreased significantly over the last 10 years.
Still
the cost
half the world.
of ownership of smartphones, though, is continuing to drop. So I'm long-term optimistic about that. I think you're accurate to say, though, that it doesn't blanket the entire planet today. But if you think about what people are asking for, it's better, cheaper, faster, and you need good tooling to deliver on those things. We've now proven out some sophisticated infrastructure to continue to improve how people interact with their wealth. And I'm quite optimistic about what the next 10 years will bring, but it will require a period of time where we continue to build and we continue to get feedback for how we can improve. And yeah, that's what we're concentrating on.
I want to reiterate a point that he just made, because I think be long-term focused. Crypto is not a get-rich-quick scheme. You will get hurt. Crypto is difficult, it's complex, it's going to be part of the future, and the only way to do right by something that we're all talking about what's going to happen over the next 10, 20, or 30 years. Be long-term focused, and you'll be handsomely rewarded in myriad other ways.
All right.
Well, and don't take our word for it. I mean, do take our word for it. Because we know what we're talking about. Trust us. And by the way, solidarity, brothers and sisters, for all of you who said you were investing already. So we're clearly in the right group. But like, look at Andreessen Horowitz. These were the guys that figured out the internet before everybody else and really made huge long-term bets in the late 90s that ended up being the backers of some of the biggest companies of the world today. That same company raised $4-5 billion like that earlier this year. They didn't even have to flinch, and they got that money. They see this. So the smartest guys in the room who understand how this technology and network effects really work, because they've done this before and multiple cycles, they're backing it. And to Hany's point, this is the long-term investment. So this is already underway. You know, we had something like 22, 23 billion of VC investment last year. We've already eclipsed it this year, and it's a bad year for this space. So don't take our word for it, but do.
Andrew, last word to you.
I would just say anyone here that's looking to be onboarded in this space, anyone on this stage will help you do it. And in the industry itself, you will find other people that will help guide you and help you. It is a very collaborative environment. It's very community focused. We care about the long-term viability, and this will be a very hot political topic for years to come. But the youth is coming, and this is inevitable.
Well, gentlemen, thank you very much for joining me here for this discussion around building a better crypto economy. Let's give them a huge round of applause, ladies and gentlemen.